Welcome back and Happy New Year. Gold has broken above the 1250 level and has trended higher. Is investor demand justified in today's conditions? Joining me back now, Peter Hugg, Global Trading Director for Kitco Metals. Pete, good to see you. Happy 2019.
Yeah, happy 2019. Good to be here.
So, as you know, gold has broken past its 200-day moving average and is now at 1284 an ounce as we speak. Is this a technical sign to sell, or are we going to see more momentum here?
I'm still constructive of the market. If you recall our conversation prior to the Fed meeting in December, we thought that we would have similar action December 2018 that we had in the previous 2 years. When the Fed raised rates in December, we had a little bit of a hiccup right after the rate increase, only by about $10. The gold price sold off, but then rallied and has been in rally mode ever since. And I think it's all sort of cross-tied to what our view was on the Fed going way back to the fall of last year, where we thought that the analysts were a bit aggressive with their calls that the Fed would raise rates, 3 to 4 times in 2019. In fact, we were probably one of the few firms that suggested the Fed may not raise at all in 2019. And as it stands right now, we still hold that view. And as early as this morning, there was some rumor out that one of the Fed governors indicated that they might even be looking at dropping rates sometime in 2019. So we're still constructive of the market. I'd like to see, sort of the show me the money type of scenario here. I'd like to see gold close above 1302. I think that's an important technical level for me. And if it gets through 1302, I think the 1320s are definitely in the cards. But the short-term play here on gold is really going to be dollar related. Today we've seen the first signs of some dollar weakness with the Fed posturing on a weaker side with their rate outlook. And as the dollar continues to weaken, if that is going to be the scenario, I suggest that gold and silver, especially silver's already moved up well over $1 since our last call, remain constructive, and I'm looking for at least a test of 1302 and hopefully a break to the upside.
Yeah, and just on the point about the Fed there, Pete, I'd like to get your thoughts on how likely you think Donald Trump will get what he wants from the central bank here this year.
Well, I think he's already got some of what he's looking for, at least from a verbiage perspective. If you recall Powell's sort of comments back in the fall of 2018 and some of the Fed governors, they were extremely hawkish. And they were hawkish almost right into the December meeting. And now, just the other day, Powell has backed away from his hawkish tone. And now some of the other Fed governors are actually talking about interest rate decreases in 2019 if the economy slows to where analysts are expecting it to slow. So already the shift has begun, at least from a verbiage perspective. Now we'll see what the action is, but I do not see the Fed moving in March. And I think they're going to wait. And I mean, the earliest I think we could possibly see renewed talk about an interest rate increase would be June. So there's a big time window now between now and June for the market to absorb a more passive Fed. And there'll be other geopolitical issues that also concern the market, such as the Brexit vote next week. You've also got the China trade talks that are still ongoing. So there's a number of geopolitical issues out on the table as well that are supportive of the metals. So overall, I remain constructive, but from a technical perspective, I want that 1302 taken out.
And I know we're just starting the year here, Pete, but I'm going to ask you your outlook for 2019. And, we'll be talking more about this on our panel during the Vancouver Resource Investment Conference coming up next weekend. I will be moderating the panel. You will be one of the experts alongside Peter Schiff, Frank Holmes. You're speaking quite optimistically about the metal space here. You mentioned silver having a good run here. Can this last this time around?
Oh, absolutely, I think it can last. I mean, again, I don't want to be out there being, an uber bull here and saying this is it, it's going through the roof. But I mean, if you look at the dynamics of what caused the gold market to sell off over the past 2 or 3 years, a much stronger dollar, the Fed being aggressive with their interest rate tightening policies over the past 2 years. I mean, that's generally a negative for the metals, and the metals were basically selling off against that backdrop. Things have now started to shift. Now we've got the Fed possibly already at neutral. I think they've probably gone past neutral, looking to at least wait for, I think, as long as 6 months, maybe longer, before they do another rate increase. That should impact the dollar. The dollar has benefited from a higher yield on the U.S. side relative its European and Japanese counterparts. So if the dollar starts to weaken, I think commodities in general will get a lift in 2019. Now, there are risks to that scenario, and that risk would be that this economy really does go into a recession. So what generally happens in that context is you'll see investors raising cash, which does not make the metals immune. They'll sell their metals to generate cash, and then as the Fed reacts to that slowing and ratchets down interest rates even quicker, that's when gold will start to take off. So the overall view I have is constructive. If you're looking for a price point, I think there is a very real possibility that we're going to test that 1365 resistance that we've had trouble with over the past 2 years. I think this time, if we test it, we get through it. And if that's the case, I see a 1420 print sometime in 2019.
All right, just one final point, because you mentioned the R word, recession. In your opinion, what's the likelihood of that happening, Pete?
God, given what's going on with the U.S. government, there's a lot of potential errors that are around the corner. I think that you've got a government that is stalemated. Both the Democrats and the Republicans are not going to work together. They may do an infrastructure project. I mean, that's my only hope for some fiscal stimulus in 2019. But then I'm concerned about Brexit and what that could do if that fails relative to the economic situation in Europe. It could be an outside factor that causes an acceleration of slowdown in the U.S., again, with the China trade war and potentially the issue with Brexit. There are some outside risks which could accelerate a downturn in the U.S. economy. So there's a lot of unknowns right now. But given the fact that there are these unknowns and the Fed looks like it's backing away from its hawkishness, I think you need to be constructive on the precious metals complex here, and certainly would not be selling my insurance positions if I was an investor with a mindset of going into the metals markets as a protection against the balance of my portfolio.
Peter Hugg, look forward to seeing you next weekend in Vancouver. Thanks so much for joining us.
You're welcome. Thank you.
And thanks for watching. We'll have more for you. Stay tuned.